Picture this. You wake up, you check the news, and the headline basically screams, Mexico just seized the silver. Not a small mine, not one company. Mexico, the country that sits on the heart of global silver supply. And if that headline is even halfway true, it changes everything. Because silver isn't just a metal, it's money, it's industry, it's solar panels, it's electronics, it's military tech, it's EVs, and it's one of the smallest, easiest markets on Earth to shock. Now let me ask you a real question before we go any further. If the world suddenly loses a big chunk of silver supply, where do you think the price goes? Down or violently up? Because here's the scary part. Silver doesn't need a little more demand to spike. It needs a supply squeeze and a tiny spark. And right now, Mexico is that supply story. In this video, I'm going to walk you through what's actually happening in Mexico, why people are saying seized. I will tell you what the real risk is and how a chain reaction could create a silver move that almost nobody is positioned for. And yes, we're going to talk about the $150 silver scenario, not as a fantasy, as a math problem, a supply problem, and a psychology problem. Also, quick favor before we get deep into it, because it really helps this channel reach more people who care about real-world money topics. If you want more videos like this, simple, straight, no fluff, hit the like button and subscribe. And stay to the end because I'm going to give you a simple way to think about silver that can keep you from getting shaken out when it moves fast. Now, let's address the headline. Mexico seized all silver mines. If you're imagining soldiers marching into every mine and putting a flag on it, that's not what's happening in one clean, official press release. Real life is messier. What's happening is closer to this. Mexico has been tightening control over mining through permits, rules, environmental enforcement, concession reforms, taxes, and political pressure. And if you're a mining company or an investor, it can feel like a seizure because the government doesn't have to physically grab the mine to control the output. All they have to do is turn the key that lets the mine operate. That's why this is so important. In mining, permission is everything. Without permits, you can own the land, own the machines, even have the silver in the ground and still be unable to pull it out. And when a government starts slowing permits, changing concession rules, challenging water rights, and making renewals uncertain, production can drop even if the geology is perfect. So why is Mexico the focal point? Because Mexico isn't just another producer. Mexico has been the world's top silver-producing country for years. Depending on the year and the source, it's roughly around a quarter of global mine supply, give or take. That's massive. If Mexico sneezes, the silver market catches a fever, and silver is already a tight market. People hear silver and think there's an endless amount sitting around. But the silver market is weird. A lot of silver is produced as a byproduct of mining other metals like lead, zinc, copper, and gold. That means silver supply doesn't instantly surge just because silver price goes up. If a copper miner isn't expanding, your extra silver doesn't magically appear. Supply is slower, demand can be sudden, and that's why silver is famous for explosive moves. Now zoom out for a second. Governments around the world are under pressure. Budgets are stretched, politics are polarized, and resources are power. Countries want more control over what comes out of their ground, how fast it comes out, and who profits. Mexico has a history of resource nationalism. If you know anything about Mexico's past, you know the country has nationalized key resources before. And even when it doesn't nationalize something outright, it can still steer the industry in a direction that benefits the state. Over the last few years, Mexico has pushed policies that made mining tougher in multiple ways. Mining concession reforms have been proposed and advanced. Permit timelines and approvals have become more difficult. Environmental rules and enforcement have become stricter. Some projects get delayed, some get challenged, and some get stuck in a slow grind that can last years. And remember, in mining, time is money. Delays can destroy the economics of a project. And here's where fear enters the market. Investors don't wait for the final step. They front-run the risk. If traders believe supply is at risk, prices can jump before the shortage even shows up in the numbers. So when people say Mexico seized all silver mines, what they're really reacting to is a pattern. More government control, less certainty, and higher risk that production gets interrupted. Let me make this real. Imagine you run a giant silver mine. You have thousands of workers. You're moving rock, processing ore, shipping concentrate. Everything is a machine. Now imagine you suddenly face new permitting hurdles, stricter water limitations, new concession conditions, more inspections, more legal disputes, and political pressure. Even if you keep operating, your expansion might be blocked. Your next phase might get denied, your replacement permits might get slowed, your output can plateau or decline, not because you ran out of silver, but because you ran out of government patience. Now, here's a question for you. If you were the government and you knew the world needed silver more every year, solar panels, power grids, data centers, would you want foreign companies controlling that pipeline? Or would you want more of that value to stay inside your country? That's the motive. Whether you agree with it or not, you have to understand it. And we haven't even talked about the timing, because this is happening while industrial demand for silver is growing. Silver is not like gold, where most of it just sits in vaults. A lot of silver gets used up. It gets scattered in tiny amounts across electronics. Some of it is recycled, sure, but much of it is not economically recoverable at scale. So demand grows, supply gets constrained, and the market gets tighter. This is why silver can go from boring to unhinged fast. Think of silver like a crowded exit door in a theater. Everything's fine until somebody yells, "Fire." Then suddenly, it's not about the size of the door. It's about panic, speed, and bottlenecks. In silver, the door is supply and available inventory. The fire can be anything: a policy shock, a currency crisis, a war headline, a sudden solar boom, a major ETF inflow, or yes, a major producing country tightening the screws. And Mexico is that door. Now, I want to be fair and grounded here because I don't want to sell you a movie script. The real story is not Mexico took every mine overnight. The real story is Mexico can change the supply outlook with policy. And the market might be underestimating how quickly that can matter. So what's the next step? We need to look at why the silver market is uniquely sensitive, what a Mexico-driven disruption could actually do, and why people are whispering numbers like $100, $150, even higher. Because once you understand the mechanics, you'll see why silver doesn't need perfection to spike. It just needs pressure. Let's talk mechanics, because this is where silver gets misunderstood. Silver pricing is not just supply and demand like a simple farmer's market. Silver is a futures-driven market with paper contracts, leveraged bets, and a physical market underneath that can get tight without the paper market admitting it right away. And when physical tightness becomes impossible to ignore, price can gap up in a way that feels like it came out of nowhere. So let's build the chain reaction step by step. Step 1 is the Mexico factor: uncertainty. Even rumors of tougher rules can change capital flows. Mining is a long game. If CEOs believe Mexico is becoming less predictable, they delay investment, and delayed investment becomes delayed production later. Mines decline naturally over time unless you invest to maintain and expand them. So uncertainty today can mean less metal tomorrow. Step 2 is the global reality. The world is building more things that require silver. Solar is a huge one. Power grids, charging infrastructure, data centers, consumer electronics. And on top of that, you have investment demand that comes in waves whenever people get nervous about inflation, debt, or the dollar. And right now people are nervous. Let me ask you something. Do you think the next few years look calmer or more chaotic, more stable, or more politically and financially stressed? Because silver is basically a chaos metal. It's part industrial, part money. That mix is exactly why it can explode. If the economy is strong, industry uses more silver. If the economy is weak and money gets printed, investors run to precious metals. Silver can win in both directions, just for different reasons. Now, step 3 is the part nobody likes to talk about: available inventory. It's easy to say there's plenty of silver. But what matters is how much silver is for sale at current prices. If holders decide not to sell, available inventory shrinks. And when you combine that with any supply disruption, like delays or crackdowns in a major producer, the for sale amount gets even smaller. This is why the silver market can get squeezed, not in a meme way, in a real supply chain way. And Mexico matters here because if Mexico's production growth slows, or if expansions get blocked, the world can't just replace that output instantly. New mines take years, permits take years, financing takes years. And if Mexico is one of the key pillars, losing even a portion of expected supply can tighten the whole system. Now let's tie this to the big number everyone clicks for: $150. I'm not saying silver hits $150 tomorrow. I'm saying there is a logical pathway where $150 becomes possible. And the pathway is not magic. It's math, plus human behavior. Here's the cleanest way to think about it: the gold to silver ratio. Historically, gold and silver move together, but not evenly. Sometimes silver is cheap relative to gold, and sometimes it catches up violently. When silver catches up, it tends to overshoot. That's because silver is smaller and more emotional as a market. If gold goes higher in a serious way, silver can go much higher in percentage terms. Let's do simple numbers. If gold went to $3,000 and the gold to silver ratio dropped to 20-1, that implies $150 silver. That's not an opinion, that's just division. Now you might say, okay, but gold at $3,000 is crazy. Is it? In a world of record debt, constant deficits, and central banks holding gold as a strategic asset, gold at $3,000 is not science fiction. It's a scenario. And if gold runs, silver usually doesn't politely follow. It lags, then launches. Now add the Mexico factor. If silver supply gets tighter while gold is rising, silver can accelerate faster. Also, remember what silver is today. Compared to gold, it's still relatively small in dollar terms. That means it doesn't take trillions of dollars to move it. It takes a surprisingly small amount of new money chasing the same ounces. And this is where psychology kicks in. Silver is famous for doing nothing for a long time, boring everyone to sleep, then ripping higher so fast that people can't believe it. Then it pulls back, shakes people out, and runs again. That cycle is brutal, and it's why most people fail to hold it through the full move. Have you ever watched a chart and felt that pain? You sell because it's quiet, then it moves without you, or you buy because it's moving. Then it drops and scares you out. Silver is basically a stress test for human patience, so what could light the fuse? 1. Policy shocks in Mexico. Not necessarily nationalization, but anything that reduces expected supply, delays projects, or creates legal fights that slow output. 2. A broader commodity squeeze. Energy, metals, shipping, refining. If any of these tighten, mining output suffers. 3. Investment demand returning hard. This could come from inflation fears, a recession, banking stress, or just a loss of confidence in the financial system. 4. Industrial demand surprises, especially around solar and electrification. Even small forecast changes matter when the market is tight. Now I want you to picture this in real time. Silver is sitting around, let's say it's trading in a range, and most people are ignoring it. Meanwhile, Mexico headlines keep coming. One mine faces a permit challenge, another project gets delayed, another company hints that regulations are getting tighter. Nothing looks like a crisis yet, but supply expectations quietly get revised down. Then maybe gold starts moving, maybe the dollar weakens, maybe rates get cut, maybe inflation doesn't go away the way people expected. Suddenly, silver breaks out of its range. At first, nobody believes it. People say, it's a fake out. Then it keeps going. Shorts cover. Momentum traders jump in, ETFs see inflows, physical buyers rush and premiums rise. Dealers start saying delivery is delayed. That's when the public shows up. And when the public shows up, silver doesn't move like a normal asset. It moves like a crowded exit. Now, does that guarantee $150? No. But it shows you why $50 can happen faster than people think, and why $80 or $100 becomes thinkable once momentum and fear take over. And if gold is high enough and the ratio compresses enough, $150 becomes a mathematical outcome, not just a clickbait number. But here's the real twist, and most people miss this. The biggest moves in silver often happen when you least feel ready. Or they happen when positioning is wrong, inventories are tight, and confidence flips. So if Mexico is tightening the silver pipeline, even slowly, it's not the kind of thing you ignore. It's the kind of thing you watch like a hawk. Let me ask you a question that matters if you re-watching this as an investor, or even just as someone who wants to understand the economy. If silver starts moving fast, do you want to be reacting? Or do you want to already understand why it's happening? Let's bring it home with a story you can actually follow. Because the silver market is noisy, and if you don't have a simple framework, you'll get pulled around by every headline. Here's the framework. There are 3 forces that push silver: trust in money, industrial hunger, and supply control. Trust in money is the big one. When people trust the system, silver is just a metal. When people don't trust the system, silver becomes money again. And money demand can rise much faster than mine supply. Industrial hunger is the steady one. Even when investors are bored, factories still need silver. Solar manufacturers don't care about your emotions. They care about production schedules. Supply control is the lever. This is where Mexico matters. Because when a major producer changes the rules, it's not just about that country. It echoes through global supply chains, corporate decisions, and investor expectations. Now, let's talk about Mexico one more time, in plain English. Mexico doesn't need to announce, we own all the silver mines now, for the market to react as if control is tightening. If Mexico makes it harder to get permits, harder to expand, harder to renew concessions, stricter on environmental compliance, stricter on water, and generally more unpredictable, then production growth can slow and investment can leave. That alone is enough to create a supply narrative. And narratives move markets before spreadsheets do. If you're a silver investor, the trap is thinking you'll have time. People always think they'll have time. But silver is the kind of market where you can blink and it is up 20% in a week, and then the news finally starts paying attention after the move already happened. So what do you watch? You watch Mexico-related mining headlines, but you also watch the second-order effects. Company earnings calls where they talk about permitting delays, production guidance being reduced, projects being postponed, or costs rising because of regulatory friction. You watch physical premiums. If the spot price is calm but physical coins and bars start getting expensive or scarce, that's a signal that real-world demand is pulling metal out of the system. You watch gold. Not because silver copies gold perfectly, but because gold often leads the money trust trade. When gold is strong, it's a clue that investors are getting defensive. You watch the gold to silver ratio. When it starts dropping fast, it often means silver's in catch-up mode, and that's when the moves get violent. And you watch sentiment. When everyone is laughing at silver, that's often closer to a bottom than people think. When everyone is screaming that silver is going to the moon, you're closer to a shakeout than they realize. Now, I want to slow down and make this personal for a second, because this is where retention gets won or lost in real life. Imagine silver breaks out. Your phone starts buzzing. People online are posting price targets. Some are saying $50, some are saying $100, some are saying $150 like it's guaranteed. You feel excitement, but you also feel fear, because you remember the last time something spiked and then crashed. This is where most people mess up. They treat silver like a lottery ticket instead of a position. They either go all in at the worst moment, or they sell too early because they can't handle volatility. Silver's biggest enemy is not the market. It's your own nervous system. So here's a better way to think about it. Instead of asking, is silver going to $150? Ask, what would have to be true for silver to even have a chance at that? Gold would likely need to be much higher than today, because $150 silver with low gold doesn't fit the usual relationships. The ratio would likely need to compress hard, which typically happens late in precious metal bull cycles when silver finally catches up. Physical demand would likely need to be strong, and supply would likely need to feel constrained, not just on paper, but in the real world. Mexico tightening mining conditions adds weight to that supply story. It doesn't guarantee $150, but it makes the market more sensitive, and it raises the odds of sharp moves. Now let me ask you a direct question, because I want you to engage with this like a thinker, not just a viewer. Do you believe Mexico is trying to protect its environment and communities? Or do you think it's moving toward resource nationalism and greater state control? And if you think it's both, which one is the bigger driver? Because your answer changes how you interpret the next headline. If you believe it's mainly environmental, you might expect slow tightening, more compliance costs, and long delays. If you believe it's nationalist control, you might expect tougher negotiations, more taxes, more state participation, and higher political risk. Either way, uncertainty rises, and uncertainty is kryptonite for mining investment. Now, there's another angle people don't talk about enough: timing. Mining doesn't respond quickly. Even if silver hits higher prices, new supply doesn't arrive overnight. It can take 5 years, 10 years, sometimes longer to bring meaningful new production online. That's why supply shocks are so powerful in the short to medium term. So when people laugh at silver shortages, what they really mean is, I assume supply can adjust. But in mining, supply adjusts slowly and demand can change fast, and that's how spikes happen. Now, I want to be responsible here. This is not financial advice. Silver can be extremely volatile. It can run hard and then drop hard. It can shake out weak hands repeatedly. And headlines can be exaggerated. Always do your own research, and if you're investing, manage your risk like an adult. But if your goal is simply to understand what's going on, the core message is this: Mexico is one of the most important silver countries in the world. And when Mexico tightens control over mining, the global silver market feels it. Combine that with rising industrial demand and fragile trust in fiat money, and you get the ingredients for a major move. So here's what I want you to do now. First, if you made it this far, you're the kind of viewer who actually wants to understand the world, not just scroll past it. Share this video with one person who cares about inflation, investing, or real-world geopolitics, because most people have no idea how important Mexico is to silver. Second, drop a comment and tell me what price level you are watching most closely in silver over the next year and why. Is it a breakout level? Is it the gold to silver ratio? Is it physical premiums? I read the comments, and your answers also help other viewers see angles they didn't think about. And finally, if you want more videos that connect geopolitics, commodities, and money in a way that's easy to follow, make sure you're subscribed. Because the next headline might not say Mexico at all. It might say export restrictions, new mining reform to permit crackdowns, or supply disruption. And by the time the mainstream catches up, the chart will already be moving. So keep your eyes open. Watch the signals, not just the noise. And tell me in the comments, do you think the $150 silver talk is crazy, or do you think it's just early?